Expense for oil. At 31 March 20X4, a company had oil in hand to be used for heating costing $2,050 and an unpaid heating oil bill for $900. At 31 March 20X5, the heating oil in hand was $2,325, and there was an outstanding heating oil bill of $800. Payments made for heating oil during the year ended 31 March 20X5 totaled $8,650. Based on these figures, what amount should appear in the company's statement of profit or loss and other comprehensive income for heating oil for the year? Answer: used oil equals opening oil plus purchase minus ending oil. Closing accrual for oil equals opening accrual plus purchase minus payment purchase equals closing accrual for oil plus payment minus opening accrual equals 800 plus 8,650 minus 900 equals 8,550. So used oil equals $2,050 plus $8,550 minus $2,325 equals $8,275.